Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, March 28th, 2017. I was kind of anticipating that we were going to get some type of bounce today. We got a pretty good one. One of the things that kind of sealed the deal was all the talking heads talking about if the Dow or something would have closed down today, would have been 9 days in a row, and we haven't seen that since 1978. Blah blah blah. You knew they were going to try to bring it up, but it made sense. And I'm going to try to walk you through the different scenarios that we have because there's still a couple open right now. So first, the preferred count would be that we had made an ABC of an A. Now we're making the wave B, and remember I'd put in the morning notes a bounce up to the 2360. That's pretty close to where we got. I think we made the 2364, which is also the moving average. So the next move, if this is going to be the correct count, is we should turn anywhere between the 71 and the 85, 23, 71, 85. It would be a lot better if they turned it right around here, and then the wave C down. And the reason why I like that is because it would give us some it would give us a reason to be looking at things where support held. Like right now, you have the moving average that held, but if you look at where it was, there was really no price support. So you want to see price support hold, and one that really stands out is between the 2303 and the 2280 area. So this support zone right here would make sense, but the fact that we have just an ABC down, we have to leave the door open for this is still your wave 3 here, this is your 4, and now we're going to make a wave 5. Now, I don't like that count for this particular reason. And if we go to a 15-minute chart, you can see that this low right here, there is no bullish divergences at all. Now, it doesn't have to be that way where we get bullish divergences, but on the shorter term charts, they do typically give us bullish divergences before an important low is made. So this kind of looks like it's an ABC move. We don't really have any bearish divergences here, but we're very overbought on the 15-minute chart. If we look on a 5-minute chart, we do have bearish divergences, still overbought. So we have a sell signal on as far as bearish divergences on the 5, we're overbought. 15-minute, we're overbought, and the 60-minute, we got into the neutral zone. So right now we have the S&P that's in this resistance area, and I've been showing you, if they got above this level here, that this was going to be the zone that the bears are going to try to defend, and if they get above this 2370, then most likely we're heading up to touch these highs or test them in that area. So we're right in the resistance zone. We burned off some of the 60-minute oversold conditions. We got the 15-minute into into the overbought levels. And being we don't have, the bearish divergences, maybe something that may play out is, we get a little bit of a pullback tomorrow towards the open, and then bring it back up and either test these highs or break it slightly, where now it's going to give us sell signals on the 15-minute chart as well, and that would be able to bring this into the overbought levels. And it's it would make sense because right now I think there's a lot of shorts that are really really scared of this market. Whenever they get a little bit comfortable on the downside, we're finding the bid come in, and then from there they're adding on to it the next day. So now we're starting to get the psychology of the bulls thinking that they're missing the train, so they're going to start chasing. And especially if we get somewhat of a little bit of a pullback that holds and then goes up, that's going to get them chasing. It's going to get the bears to jump out of their short positions, and it's going to leave the door open for this wave C to the downside. And honestly, if this is going to be the play, I can honestly see this thing going down in a very, very fast manner. So this is a possibility, and I'm not saying it's definitely it because, like I said, this really could be just an ABC wave 4, and now we're making the wave 5. But the fact that we just really I would believe that it would make more sense if we came down and tested that 2300 to 2280 area. But like I said, the market is going to do what it wants to do. I just want to show you the different scenarios that are in place, and the fact that we were looking for the bounce today and we got it. The ABC of an A, and now we're making the wave B and then the wave C down. It's fitting the profile because this is what we needed for this to take place. Now, the thing is this. Because we have the bullish divergences on the 60, most likely that if we do pull back from here and come into this level, you're probably going to have a safer trade to be buying this dip here, because we've had a pretty good move off of these highs to the downside. So if it comes down, this is going to be where you want to be looking to buy the dip. So I was saying to short it all the way, basically from here up to here. And now it's time to start looking, especially if we come down, to start buying the dip, because if we do come down to this level here, most likely we're going to get our momentum that's going to come down to the neutral or possibly even to the over sold levels. So that's pretty much what we're looking at right now. Is the Bears need to defend the highs today, and that's the 2364. If they lose that, then we're probably going to see 2371 and then 2385. This is really the line in the sand, because if they get through it, then we're probably coming up to test these highs up at this the 2400 level. So that's really what we're looking at. What the Bears need to do is push it through this moving average, because we're on a sell signal on the 60s here, and we also have a pivot. So if they can get it through this 2351, then we're probably going to get a quick move down to the 2336 and then test this 2321. So let's just take a look at, I put this out for the sentiment timing report, and I'm gonna show you. I'm gonna try to do this on each day, and this is just what's going on with the S&P, and I'm showing the daily, the 60-minute, 15, and 5. So momentum, we are overbought on the daily, neutral on the 60, which I showed you, and overbought on the 15 and the 5. So this is giving you a red light. Don't get too comfortable on the long side. Divergences, we have the bearish divergences on the daily. We have bullish on the 60, bearish on the 5s, and we don't have anything on the 15s. And if you remember, if I just go back to the 15 here, this is what I'm talking about, where we made the low here and we didn't have any bullish divergences. Now, if we make a high, what's going to happen is this is going to switch to a bearish divergence. So then we're going to have three different bearish divergences in place. This will then move to the most likely the overbought. So you can see where these reds are popping up, and it's not really wouldn't be too safe to be buying that. Now we're on a sell with the 60 and the 15, and what that basically means is we have the moving average, the 50-day, that's below the 200. So we're on a sell on the 15. On the 5s, today's move got us into a buy, but they go back and forth pretty quick. It's just if we get into a trending move, that's when it kind of stays below it. But on the 60, you can see we just got the cross. So it's not safe to just be buying right here, because the bulls still have to dig themselves out of some issues right here. So we have resistance on the daily, that's 2383. 2363 is what we hit today. This is what I put out today as far as the resistance. I had the 5-minute at 2351, 2358, and 2363, and that's pretty much where the high was. That's why I have that highlighted. So we never really tested any support levels, so we're just going to keep them in place. And we have the 2357, 2347, and 2336 are the support areas. Now I added something here, and this is the bullish momentum line. And what it means is momentum should pick up on the upside if they take out the 2370 to the upside. And then we're going to have targets of 2377, 2383, and then 2391. The bearish momentum line is 2342. Now, if we get below that, we're going to the 2338, 32, and then the 22. So it actually, if we just look at the charts, you can see this is that 2370 level. Then it's going to this pivot here and then up here. if we take out this 2350, that's the moving average, that's going to give us that quick drop down to the down to these levels right around that 2340 level, and then eventually coming down to the 2321. If we take that out, that's when we start looking at the 2300. So right now, we have those different scenarios in place. I like the preferred count as this is a wave B and we have a wave C that's pending. Tomorrow we could see some chop, but maybe on Thursday see that sharp move to the downside. So with that, let's see what plays out. Have a great night, and I'll talk to you guys tomorrow.